Hello folks, it is Thursday, August the 10th. It's about 8:30 in the evening on the East Coast of the United States. In this video, I'm going to talk about Jim Sinclair and one of the ways that he estimated the price which gold would reach. Now, if you're not familiar with Jim, he was known as Mr. Gold because in 1977, when gold was at $150 an ounce, Jim predicted that gold would reach $900 an ounce. And so think about that for a minute. Gold's at $150 an ounce, and he's publicly declaring that gold's going to reach $900 an ounce. That's a pretty bold, prediction. Even with the stagflationary times that were occurring in the 70s, that was a bold prediction. And then obviously in 1981, gold reached $850 an ounce. And so, Jim earned this moniker as Mr. Gold. He retired in 2021 at age 80, founded and explored and then founded this mine, however you pronounce that, in Tanzania. He was the individual who liquidated the Hunt brothers' precious metals position. Remember, the Hunt brothers, they cornered the physical silver market in the 80s, late 70s and early 80s. He was the founder and chairman of the board for Tan Gold in Tanzania, and then a philanthropist in Tanzania and other parts of the world. So that's a little bit of background on Jim. He was also the founder of the website jsmindset.com. And during the 2002 to 2012 precious metals rally, JS Mindset was one of my daily go-to websites. I really looked forward to anything that Jim was going to share with us. He had, at that point, more than 40 years of experience in the gold industry. So very knowledgeable man. Really wanted to hear what he had to say during that period of time. In recent years, he handed the reins to Bill Holter. And you may have heard Bill Holter. You can find his work on the internet and YouTube. So Jim handed the reins to Bill Holter, and we started getting content from Bill. And then just in the last, I guess, 2 years or so, I don't know the details. There's some question of ownership or maybe a little bit of infighting about ownership of that mindset. JSmindset.com website, and currently it's offline. And so if you try to go to that website, you'll just get a white page. So anyway, that's unfortunate, but that's part of history. So one of the things that Jim would say repeatedly is that when gold reached that $850 an ounce in 1981, that it exactly balanced the books of the United States. And I always found that interesting, but I never did the math, and he never really shared the details of how he arrived at this conclusion. And so that's what I'm going to look at in this video is, okay, what does that mean? Can we replicate Jim's work? Basically, that was the question that I had for myself is, can I do the math that brought Jim to this conclusion? And then I got another data point when I was researching for this video. I found a quote. This is from Jim. And so he's saying that this is in 2012. So October of 2012, Jim is saying that the price that gold would have to reach to balance the international balance sheet of the United States is $12,400 an ounce. And so now we have two data points. In 1981, we've got the $850 an ounce to balance the U.S.'s books. And then in 2012, we've got the $12,400 price to balance the U.S. The books. And so, and then this is a continuation of Jim's quote that this is the true function of gold to balance the U.S. balance sheet. And, as gold bugs, I consider myself a staunch gold bug. Don't I wish that were the case today? As we'll see, to balance the books today, we'd have quite a quite a high price of gold per ounce. So this is data from the government showing the U.S. deficit. And so there's when we talk about balancing the books of the United States, there's two areas that we have to look at. We have to look at internally, so within the United States, the difference between income and outgo. And so income is tax revenues, outgo is what the government spends, and then the balance of those two is the deficit. Can be positive, or mostly it's been negative throughout most of the United States history. During Clinton's administration, they played some games with the numbers to make it look like we had actually had a surplus for a brief period of time, but that was just accounting machinations. We didn't really have a surplus. But anyway, that's not the point of this video. So here we see 1981, the deficit spending was $79 billion. In 2012, it was up over $1 trillion. 2021, that's the last data in this series from the government, 1.375 trillion. And then, of course, notice, we've looked at this chart before, during all the COVID shenanigans, that was 3.5 or something trillion dollars of deficit spending. So significant deficit spending during those periods. So anyway, there's our three data points, the deficit spending within the United States. And then the second area that we have to look at to balance the United States books, the accounting books, is our trade balance with the rest of the world. The difference between the goods that we export, as that would be income, and the goods that we import, the stuff that we buy. And the difference between those two numbers gives us, in the United States case, again, mostly a negative number, basically money that we owe the rest of the world. And so to balance the United States books, we'd have to cover the internal deficit spending and then the balance of trade with the rest of the world. And again, here's our three data points. 1981, we got 12.5 billion. 2012, 551. 2021, 861. So there's our three data points for that. So now the objective is to balance the accounting books of the United States against our gold holdings. Now, nobody really knows what are the true amount of gold that the United States holds. There are many people who don't believe that the United States still holds this much gold, or maybe there's still that much gold in miscellaneous vaults in New York and Fort Knox, but the gold has been hypothecated and re-hypothecated, basically paperwork, somebody else owns it. But anyway, officially the United States holds this many tons of physical gold. So we're going to use that number as the gold that the U.S. holds. There's 32,000, that's the number, troy ounces in a ton. And so if we multiply those two numbers, we get this. So that's the number of troy ounces of gold that the United States holds or claims to hold. Now, when we do the math, using that much gold against these deficits, and so you can see in this spreadsheet, here's 1981. I've added the two deficits there's the total deficit for that year, 1981. And so to balance the books, we have to divide that deficit against that many ounces of gold. And what I arrive at is a price of $350 an ounce. And so I come up with, I don't get the same number that Jim came up with, because remember, he repeatedly said that $850 an ounce exactly balanced the accounting books for the United States. Now, he never shared, as far as I'm aware, I couldn't find it in my recent research, and I don't remember, in all those years, the 10 plus years that I was going to his website, I don't remember him sharing the details of how he arrived at that conclusion. Perhaps Bill Holter knows, and I'll reach out to Bill and see if he's got any insight into that he's willing to share. But so anyway, I came up with a discrepancy. That's Jim's number. That's my number. Again, assuming, well, there's several assumptions. The main one being that, the United States really holds that much gold. And then numbers that are published by the U.S. government, and it pains me to even say this. I shouldn't have to say this. As an American citizen, I shouldn't have to distrust my government when it comes to accounting matters, but unfortunately I do. And so that's another assumption that I'm making in this analysis, is that the numbers that the government publishes are factual, accurate. And so anyway, number of assumptions that I'm making. But so anyway, based on the assumptions that I'm making, we could balance the books in 1981 with gold at $350 an ounce. Now I do the same math in 2012, and remember, we've got this data point from Jim. He was saying that in 2012 we'd need a price of gold at $12,400 an ounce to exactly balance the U.S.'s books, and I come up with a price of $6,200, basically. And so again, I don't get the same number that Jim came up with, but again, I don't know exactly how he was doing his analysis to come to this conclusion, the $12,400. Now, if we do this in 2022, using the latest numbers that I've got, I come up with this price for gold, $8,500 an ounce. And then we don't have a number from Jim for 2022. Now, one of the things I notice when I look at my number compared to Jim's number is that it's roughly half. So 350, double that, it's 700. 6,200, double that, it's 12,400. So if we assume that using Jim's methodology, we'd come up with double my number, that would suggest that gold today, based on Jim's methodology, should be $17,000 an ounce. And so anyway, this is just, it's a little bit of a tribute to Jim. I consider him as one of my mentors in the gold space. I respect him, greatly respect him as a knowledgeable individual, an expert in the gold arena. And so a little bit of a tribute to Jim, and wanted to see if I could replicate his numbers there. And I don't know about you, doing this kind of analysis of where the price of gold could be or should be, on the one hand, it's kind of exciting to think that, gold could be $17,000 an ounce right now, actually probably should be $17,000 an ounce. And on the other hand, it's kind of discouraging when we're looking, basically gold is hanging out at just over $1,900 an ounce and hasn't done anything exciting in months. You know, to think about $17,000 an ounce versus its actual price today is, is a little bit disheartening. But there it is. So based on my analysis, I would suggest that gold could or should be at least $8,500 an ounce. If we estimate, basically double that number to assume that that's the number that Jim would arrive at, we'd have a price of $17,000 an ounce. And so anyway, that's all I've got for us in this video. I just thought that might be interesting for some of you. I hope I've provided some value, and I will talk to you in the next video.